I'm going to welcome you all to BYOB Market Talks. BYOB Market Talks. Good evening, good evening, good evening. My name is Tasha M. Dyer, the Trade Whisperer. Ladies and gentlemen, the creator of the BYOB Cash Out strategy. Okay, and let's talk about our affirmations, right? My affirmations are, I am a BYOB master trader, right? I am a BYOB master trader. I am the signal. All my trades in profit, I am 777. So we definitely want to make sure we're walking in that, all right? We got to make sure we're walking in that. And then also, go ahead and make sure you add to it. Just don't take away from it. So let's see what we have in the chat. Let's see who we got. We're Divine. I'm Divine. I got, definitely the market pays me daily. The market pays me daily. I'm economically unbothered, okay? And this is where our mindset has to rest. So be your own bank. BYOB is be your own bank. Now, Be Your Own Bank is a movement. It is the largest economic empowerment movement in the history of mankind. Be your own bank. It is a movement. The strategy that we're here to talk about tonight is BYOB Cash Out. So be your own bank, cash out. So the movement is be your own bank. The strategy is BYOB Cash Out. So hopefully that answered your question. So I definitely want to welcome you to BYOB and welcome you to Market Talks. So if this is your first time on the call, your first time here with us this evening, go ahead and let me get a 111 in the chat. This is your first time on this evening. Let me get a 111 in the chat. And if you are still learning how to cash out, let me get a 222. You still learning how to cash out? Let me get a 222 in the chat. So welcome, 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 and welcome back. Welcome, welcome, and welcome back. All right, let's see here. Now, for all my new people, okay, I like that one. Because of who I am in Christ, I am my own bank. Okay, so let me go ahead and get started. I'm gonna pause when so I see we got quite a few new people on this call this evening. So let me welcome each and every last one of you all. And then I want to welcome back everybody who's still learning how to cash out, right? I definitely want to welcome each and every last one of you guys. Now, as we're looking at the chart, all right, what we have to do is we got to understand what the BYOB cash out is. So let me go ahead and break down to you what it is that we do. Let me break down to you what, what it is and everything and how these things are broken down. So in the morning calls, okay, the morning calls are designed for you to be in profit, all right? The morning calls are designed for us to go into the market. They're designed for us to take trades. Now, of course, based on market conditions, we're either taking trades or setting up trades, all right? And we trade with you and not for you. What does that mean? That means that you're the signal, right? That means that you're the signal. That means that you're going to be able to understand how to navigate the market. You're going to be able to understand how to look at the market, and you're actually going to be able to be in profit, all right? That's what you're going to be able to understand. Now, for everyone else, that these evening calls, BYOB Market Talks, this is how you become the signal, right? This is what these calls are designed to do. These calls are definitely designed to put you in that position of profit. This is where you come and we learn. And now how these are broken down on Tuesday. On Tuesday, we definitely are learning how to understand the strategy, the basics. It's BYOB basics for our market talks. And then over here on Thursdays, which today is Thursday, we talk about tools, right? We talk about how to understand the markets. And then of course, behind each one of those calls, following each one of these calls is what we call a talk with the finance doctor. So you want to make sure you're present for a talk with the finance doctor, okay? Because that is definitely going to put the stamp on it. That's going to give you that understanding, that complete understanding, that why behind the what. So this is your power pack evening. And so you want to make sure that you stay put for that, all right? This is definitely your power pack evening. So let's go ahead and get started. Now, as I get started here this evening, what I first want to do is make sure you understand how to cash out, okay? How do I pull the money out of the market? If I got affirmation that says the market pays me daily, we need to know how to do that. We need to know how do we take the money out of the market? Well, as you're going to see this evening, you can actually trade on any time frame, okay? You're gonna see that this evening. So I can trade on any time frame. I can trade on whichever time frame that I want, but there's a basics. There is a foundation, okay? Now, what that foundation is this 15-minute chart. Okay, that foundation is this 15-minute chart. Now, just like on Tuesdays, and yes, I'm gonna ask you a question up front. Tuesday's call is already posted. So, you know, just like on Tuesday, we talked about the basics. We talked about understanding that we check the news. We know that tomorrow is NFP week, right? NFP, which is non-farm payroll. We understand why the market fluctuates, why the market moves the way it does. And we understand and we ride the wave of the market, okay? So if I'm coming on here and I'm actually looking at Euro USD, and I'm on this 15-minute chart, okay? I definitely want to make sure that I'm on this 15-minute chart. Now, on this 15-minute chart, one of the things that I need to do is I'm definitely looking for my indicators, okay? This is the BYOB cash out. I'm looking for my indicators. Now, what my indicators are the three indicators you see on the screen. It is my stochastic, okay? I got my stochastic, I got my Hikinashi candles, and I have my PSAR. Is that simple. Those are my indicators. Stochastic, Hikinashi candles, PSAR, all right? I got those three. Now, with those three and understanding that I have those three, what I'm looking for is my stochastic first and foremost. With my stochastic, I must have that blue line cross over the red and a downward momentum. I got that blue line cross over the red and an upward momentum, okay? Look where I am right here. If I'm here and I got a stochastic and it's pointing up, I'm not looking for a sale right now. This is not a setup. I'm not set up for a sale. Let's look at my hour. You see that? I got a brand new hour candle, and that brand new hour candle is in a buy. So I'm not looking for a sale. You see, I have to have a crossover and cross down. That's very important. Just because I'm at the 80, don't forget about the rest. Around the 80, crossover and cross down. Around the 20, crossover and cross up. Very important. Like you saw right here, I had that crossover and cross up. So let's go back over here. I cannot stress that enough. You do not enter the trade right here. We don't enter the trade right there. That's not where I'm looking to enter a trade. Now, this is tools training. All right, this is tools training. Now, I just went through all this. Someone's on the wrong browser. That's okay. But so when I'm looking at that, when we go through here and you'll see these alerts that get sent through here, okay? You'll definitely see alerts that are pulled through here. Now, when these alerts are sent, you'll definitely see that you have, right? You definitely have the information that's sent. Like you'll see that sometimes it'll call it right here, okay? And it'll let you know that it's continuing. I want you to understand that there's still something on a higher time frame that's allowing us to know that, like right here, there's something on a higher time frame that's allowing us to know that that market is still pushing up. So it just triggered it on a lower time frame because that's typically called in a correction. Now, for you getting started, you know, we all have to start at a basics and at a foundation. If I'm getting started, I always want to make sure that when I'm getting started and where I'm getting started, I'm definitely starting from a position of, you know, following the rules to get to learn and build on my understanding. Don't start just trying to trade from right here. That crossover and cross down is very, very, very important, okay? I cannot stress that enough. Now, right here, when I look at my stochastic, blue line cross over the red and downward momentum. Here, blue line cross over the red and an upward momentum, okay? I got my red candle with a flat top. So because I know I'm looking for a sell, here I know I'm looking for a buy. I got my red candle with a flat top, my PSR flip to the top. They keep giving me a smiley face instead of my arrows. I'm gonna get excited about that. Might make some money to here tonight, right? So now, even on the training call, we did it the other day. So you look down here, I got a red candle with a flat top, PSR flip. Let's make sure we're on this flat top. Let's make these a little bit wider. Now, you can widen this with your mouse, okay? I'm clicking my mouse and I'm holding it down. I know you guys see me do this all the time. When I widen this chart, you can use your mouse like I'm doing right now. You know, you just got to figure out how to navigate your computer. So you can widen this by coming onto the price, and I can also do it along the bottom, okay? So you always see me moving my charts, okay? I move my charts a lot, but I just want you to understand, because I don't want you trying to analyze a chart and it's like this, because when we switch time frames, it's going to shift. Now, you see that I was looking for, how can I tell if that's a flat top candle right now? I put it right there, but I want to widen it up. So I've been following this for a while. I've had some 777s. So just stay with me tonight. Stay with me and see if I don't answer your question. So stay with me. So blue line cross over the red and downward momentum. A red candle with a flat top, PSR flip. And also you gotta kind of understand the market setup and the market conditions too. So you really gotta understand that as well. So now, and of course I'll be introducing some more tools. Now look how this kind of has a wick at the top, right? A wick at the top. So look, now come down here. You see how I gotta bring it down just a little bit to the next one? Because that one actually had a wick at the top. When we were sitting there, that one really didn't have a wick, right? They really didn't have a wick. So now, right here, blue line cross over the red and downward momentum. Red candle with a flat top, PSR flip to the top. Now right here, blue line cross over the red and upward momentum. Green candle with a flat bottom, PSR flip to the bottom, okay? So you definitely can see where we are right there. Now, I'm gonna make this back smaller so we can do our time frame confluence, okay? And this is the basics of the strategy. Now I'm gonna drop down to the 5, okay? I'm gonna drop down to the 5. When I drop down to the 5, this needs to still be selling, okay? This one needs to still be buying, which you can see in both cases they are. Just follow my crosshairs, right? Follow my crosshairs and you can see where it's still selling, it's still buying. Jump up to my hour. When I jump up to my hour, I'm looking for it, look like it was to be set up, okay? Look like it would be set up. This one is definitely ready for my sale. This one looks like, and that's a nice downtrend. Now, where were we on that 15-minute? Where were we on the 15-minute? You can see, oh, we were at the top of the hour. So now this is not GBP with that exception to the rule. But sometimes, remember I tell you sometimes, now you need to be understanding how Euro moves. I'm not gonna sit here and tell you that Euro is an exception to the rule. I'm not gonna tell you that, because GBP, I would be able to drop down and I'd be able to look at the 30-minute and be able to say, oh, okay, I can jump in and take a trade. So, but for Euro is, it has liquidity behind GBP. So sometimes, and I'll say that to you, sometimes. So GBP is that exception to the rule. GBP means I can check, if this was a GBP pair, I could check my hour. When I check my hour for my time frame confluence, because of the amount of liquidity that GBP puts in the market, you see how this is a doji candle? You see how this is starting to curve up? You definitely can see this right here. So based on that, I will be able to go check my 30-minute. It has to look like it's going into a shift. That's what I mean by exception to the rule. Euro kind of pushes some liquidity behind it, you know, but I don't want you to just jump in there and say, yes, GBP and Euro is an exception to the rule. No, I want you to develop a relationship with the Euros before you start trying to do that. So I'm giving you that disclaimer. Develop a relationship with the Euros before you start trying to do that. Like I can tell you across the board, GBP gives you that exception to the rule, you know, but Euro, I want you to develop a relationship. So now I'm going to also tell you to use your confirmations, use all of your rules, don't deviate from them. And that's that, because you lower your accuracy rate when you do that. So this is to answer that question in the chat, or to the comment in the chat. Now, the strategy was back tested at 92% for over a year on every single currency pair, all right? I want you to understand that. So that's where we get that 92%, not just because we felt like it, or I had a good day, or we had a test group that had a good day. No, that's not where the number came from. This strategy was literally back tested on every currency pair for an entire year. And that is where commodities, I mean, everything, right? The indices, it was back tested on everything. Now, also, to what you also to understand is that, you know, when we did that, the 92% was the lowest accuracy. So when we're giving you the rules and telling you how to take the trades, stick to the rules, they work. Because the minute you don't wait for the piece or to flip, or you don't do something, you have just lowered your accuracy rate. So now you're talking 50-50, or you know, something of that nature, because that piece or flip is important, things of that nature. So, right, yes. So now, this is where I also want to show you. So like, I can also come to my higher time frame. So there are a few things I want to share with you this evening. I can come to my higher time frame. And when I come to my higher time frame, I can definitely see that on my higher time frame, I can actually look for my confluence first. Because now I'm going to tell you guys, be patient. I've said this before, be patient. If we can put money up and wait for 40 years for a retirement plan, you know, what's the retirement age now? We can wait till we think we're going to retire at that age. We can wait 15 minutes, an hour. We can wait for a trade to manifest, okay? That's where, you know, that's where you want your mindset to be. I can wait for a trade to manifest, okay? Because we're cashing out daily. Those 777s are there for a reason. And so it's discipline. You have to have that discipline that goes with it. And that's gonna put you in that profit as well. But you can also come look for your confluence first, right? You can look for your confluence first. So I didn't change the way I trade. I didn't change anything. I didn't change the strategy. I just look for my confluence first. So now, right now, I'm going to look at my confluence, and I'm going to drop down, and then I'll do my lineup on the 15-minute chart where I would take my trade. So you can do that as well. And this is on me. I'll see if I can pull it up before, you know, to see if we need something. But because if we got enough time, then I'm going to come back and show you this. So if I need to pull this up, if not, then I'll just show you next week if we don't have enough time. But you look right here, and I can actually pull off the hour and the 4 hour, right? I can pull off the hour and the 4 hour. And if I pull off that hour, you know, if I pull off the hour, if I unclick the 15 and the 5, I'll get the alerts that come in for the higher time frames. And that'll actually help me understand and help me see when something's triggered, and I can see, or when you actually see this flip on the higher time frame, and then I drop down and I line up my strategy on the 15. So while I did different is look for my confluence first. The trading is exactly the same. Lining up on the 15, I have to wait for my confluence anyway. So I'm not entering the trade till I have confluence. So I have to wait for that anyway. So, and what's my 5 minute look like? And as long as my 5 minute is in alignment for that entry point, then I can get my 10 pips, or once support and resistance, support and resistance. Do I have an extra strategy? It's always support and resistance. It's called a stop loss. Your stop loss is your exit strategy. But I can tell you this, if you follow those rules, we were on this call and we didn't hit a stop loss for 3 months. You know, you gotta be able to put your phone down and walk away from it. You put your stop loss in, you put your take profit in, and you gotta be able to walk away from it. So that's what it is. Your exit strategy is either your take profit or your stop loss. That's your exit strategy. So, but we didn't hit a stop loss for 3 months. and we hit one because of the news. And that's why, you know, and that was only because the time was off. That's why, like, even this morning on the call, we ended the call about 20 minutes early because we were not going to take a trade close to the news. That got to be disciplined. We have to be disciplined. As tempting as it is, as tempting as it might be, because think about it. That market was buying for a minute, right? This morning, it was buying. And then we waited, and as soon as that news hit, bam, the indices that we were in, they just went for a sale. And it's like 900 points, the US 30 drop. So you just think about that. So you guys should have cashed out significantly today. I mean, seriously. But imagine if we would have stayed in those trades, right? Just imagine had we stayed in those trades, and or we would have been trading up into that, then everybody would have been upset, including me. So you never want to be in a trade like that. You don't want to trade close to the news like that. And you always want to use support and resistance and a stop loss and a take profit. All right. So now, what have we been doing, right? What have we been doing? Now, so let's look at this. Now, I'm gonna show you how to come. I'm gonna combine a few things that we've been looking at. So in the mornings, you'll see that we'll have the harmonic scanner pulled up. Okay, we'll have that harmonic scanner. And when I'm looking at the harmonic scanner, right? When I see that and we look at it, so now I want to help you understand that trend line and that break. All right, and then also these pivots that we've been looking at. So really tonight is about combining the tools that we've been using and putting them all together. All right, now right here. So just you can come through here. It's not gonna matter what broker you pick, okay? It's really not gonna matter what broker you pick. And when you pick a broker, you know, like I say, it does not matter because we're not trading on here at all, okay? We're not trading over here. This is not a standalone tool. This is not meant for you to trade by itself. So I come through here and I just pick a broker. You see I'm on a higher time frame, all right? Now, you come through there and you pick some strategies. You cannot determine these trades, okay? You cannot determine these trades. These are picked based on harmonic patterns. Now, if the harmonic pattern does not play out, then it comes off of the harmonic scanner, okay? We're not leaving it there. I can't change anything on there anyway. I mean, you can change some things on here, but I mean, as far as me wanting to come back and check it or, you know, I want to, you know, certain things. And then if it goes away, then what? You know, we're not trading it off of the harmonic scanner. I want to make that very, very clear, okay? We're not trading it off the harmonic scanner. So you come through here, you find some. Now I already have some marked up for us, okay? Or I already have some pulled. Now, one of them that we had done is GBP USD, and then another one is right here, CAD JPY. Now we didn't do this one, but this is one that we've been looking at. So I'll kind of stick with this one right here first, okay? I'll stick with this one right here first. Few things something I want to show you. So if I'm looking at this, okay, just to kind of help you understand, when I say the higher time frames tells you what the market's doing, okay? The higher time frame tells you what the market's doing. Well, what is my higher time frame doing? My higher time frame, you see I'm on a daily. We're not swing trading. Don't come to your daily chart. When you see something for the 5 minute, don't come to your daily chart. That's like trying to use Google Earth, trying to see what your neighbor's doing, right? No, we're not doing that. So you see that overall, right, what is this doing, right? What is this doing? So this is in the overall, my higher time frames tell me what the market's doing. So now, with that being said, this is not what the harmonic scanner, right? This is not what the harmonic scanner is calling right here, okay? I was on the hour chart. So, but you can see what the overall, right? What does the market do? The market goes up, the market goes down, and the market goes sideways. You saw I had one on there this morning. I told you guys, you're gonna get a little resistance when you get to a certain point. The market goes up, the market goes down, and the market goes sideways. It's just that simple, okay? Right now, market's going up overall. So it's right here on the daily. Now, but right here, you see my daily candles in a sell, right? My daily candles in a sell. But I'm not trading off of this, this gives me an idea of what the market's doing. So when I drop down to my next time frame, my 4 hour, I drop down to my next time frame, you can see where this trend line, it's actually pulled up off of this trend line some. So you can definitely see what's happening overall. But you also see that in here, let me cut my pivots on, right? You also see in here, I had that strong support resistance line, right? I have that strong support and resistance line. Now, also you see the pivots that we've been talking about. So this is what I tell you tonight, everything that we've been talking about up until this point, because of before I introduce anything new, before we add, before we do any of that, we're gonna right here. So you're gonna see how it plays together. So right here, you definitely see where this is, your support. Let me cut the pivots back off for a minute. You still need to understand that your support and resistance lines are very important here. I mean, look at this one that's real significant right up in here. You definitely have one that's in here. So now look at this, okay? Now this was a scan from earlier in the week. This was a trade and a scan from earlier in the week. So now as you're looking at this, okay, I'm looking at this. This is one where the market was riding up earlier in the week. Now, I mean, you see the dates across the bottom, and you see right here on around the 1st. So this is that 4 hour, this is that time frame. Now I drop down to my hour, you can still see. So you see I got that overall significant trend line, right? So then of course, right here, I don't know what you mean. What I try to get it earlier, the call is on Tuesday and Thursday nights at 9 p.m. Eastern Standard Time. So now right here, you see that I have this trend line, okay? I'm on this trend line. So I have this trend line, and this is where you can definitely see. So you still want to identify your trend lines, right? Support and resistance lines, they're your lifeline in here. Now we're using trend candles. So even if I didn't have this here, even if I didn't have this trend line here, you can still see that movement. But we're going to keep this trend line on here so you guys can see that trend, right? You definitely want to see that trend. Now, where this was going, right? It was going up, and then there was actually a harmonic pattern that got caught. Now, it was earlier in the week, so I don't have the numbers with me right now, but I'm just trying to show you how it plays out. So you can go back and watch Series 400 and try to make your own and identify your own harmonic patterns, or you can also just come to the harmonic scanner and see what harmonic patterns pull up as well, okay? So either one is up, but I'm gonna personally go with the harmonic scanner. So you can definitely see the patterns that are in there. Now, when this broke this trend line, I don't talk about my trend line. You said it was good tonight. So when this broke this trend line, okay, you can see once it breaks the trend line, the trend changes, okay? Not necessarily. The question is, are harmonic scanner trades always counter trend trades? Not necessarily. So the higher time frames, you'll see, like the higher time frames actually put us with this trend that was going up. Now, the reason why, that's you kind of going where I was going. The reason why I don't always call on these 15s is because, or the lower time frames, is when you see these on the lower time frames, they'll typically be ones that would be your counter trend. So like that might have been this one right up in here somewhere. You know, like let's just say, now I'm hypothetically speaking because I don't have the numbers and I didn't write the stuff down, and once they play out, they're gone. And of course you have more 15-minute trades and everything else. But let's just say that might be this one. Sometimes they'll call it this way, but you know, that would be this one, for example. So that's why I don't just jump to the 15-minute chart, because yes, I can get a trade right here and it can identify, it can be a good trade, but then at the same time, you see it can also move up this way, right? So, because I want to trade with the trend overall. So yes, that was a counter trend. That would have been a good 50 pips out of it. but you notice that that also probably would have called it down to about right here. And that's how you are going to know. This is important to know, because whether I pull it off the hour, whether I pull it off the 15, no matter where I pull it from, this is going to help me. Well, do I stay in till take profit 1? Do I keep going? Because if I'm counter trend trading, it's no way I'm going for more than a first take profit. If I'm counter trend trading, I'm not pushing the envelope like that. You see how this actually only went to here before it flipped back and started going back up? So until I see something break that trend line, then I'm not going for more than one take profit, right? I'm not doing it. So that's going to help you identify that. And then also, yes, it broke the trend line. Now, also understand that the market, when it does that, it like sometimes it's in a perfect world. In a perfect world, the market can come up, it can break, and then it'll just turn around and go down in a sell, right? That would just be a perfect world. But we also have reversal patterns. We have, you know, the market can go into a range. It can go off to sideways, right? It can do it. You just get your touches. The best way to draw a trend line is get your touches. Talking to the wrong person about the trend line. See, you don't have to be perfect. You see, you're just looking for touches. You're just looking for touches. So you haven't seen all my trend lines. So, but just know you need them. So put them on there. So don't try to be so perfect. And the reason I'm saying that is to let you know that I'm not perfect. So you don't want to try to be so perfect to where, you know, where you're trying to be so perfect to where you can't put it on there, or you don't draw it, or you get stuck there and you're not moving forward, right? I drop mine on there and keep going, right? I drop it on there and keep going. And you know, that's why I got the comment tonight. Oh, that was a good trend line you drew, you know. So hey, you know, just keep do it and do it and do it and keep going and keep practicing, just like your support and resistance lines, right? So you're gonna see this right here. You're welcome. So you're gonna see this right here, right? It's gonna help you see the market. And even when it's dropped, so now the market is starting to move a little sideways. And then don't forget what tomorrow is too. Tomorrow is NFP. And we talked about a lot of the news and everything else. So now the market's moving kind of sideways, right? Now we're moving sideways, but guess what just got identified? A harmonic pattern. And this is that harmonic pattern that it identified. That's what these yellow lines are for. So these yellow lines are for the new harmonic pattern that just got identified in the market. So, and also, okay, and the harmonic scanner uses the Fibonacci retracement. So you see what actually happened. So now the harmonic scanner, right? The harmonic scanner actually is using those, you know, the Fibonacci's. And so that's why they're not gonna match, you know, they're not gonna match at all. It's not gonna match when I drop these pivots. So now I drop my pivots, which the pivots that we've been learning are those main points in the market. Those pivots will be those center points, right? Let me show you how significant these pivots are, all right? So I was looking at the NASDAQ earlier, right? Is it this one? That's not the one I want. I want this one. It might be the NASDAQ. That's the NASDAQ. Let me go back because I was actually looking at both of them. Just to kind of help you understand something, let me drop down. So, all right, so look at how they adjust. And this is why I told you I like these because they stay on there. So when they adjust, they don't erase the ones that were already there. You can see the previous ones, so you can really see and understand the market and how it's moving, right? So here we go. Look at this. Look at this. Now, as I'm doing this, you see that these pivot points, right? The pivot points were moving and rising. So look at where my pivot point was from the day prior. You see on the second, you see on the third, and now we're on the fourth day. Look at how my pivot adjusted. So on where we were scalping, now what did I tell you guys on the live calls about the pivots? They typically stay between that pivot point. If it gets to S3, that's a strong support, and it'll try to pull back to that pivot point. If it gets to R3, that's a strong pivot, and it tries to pull back to that pivot point, right? That's what it does. It tries to adjust to that pivot point. Now, as you can see, now it was down here to the S4. It was down here to the S4. So what happened? The market is in a strong sell. It did not pull the market back up to the pivot. We rolled over into a new day and the market adjusted. So you can see the previous pivots and you can see the current pivots. So now the market has adjusted to where we are right now. So now instead of it being around S4, and look how tight they were, now they're a little more spread out, and this is based on the market. I cannot make these pivot points. The market does this. So now look, they're more spread out, and this is another day because it's on that UTC time. So this was the third, which we're technically still in the third, but the market is in the fourth. Okay, the market is in the fourth. So look, now we're on S1. So now we're on S1. So the market is always trying to pull it back up. So you see how it's still being held right here. The market is always trying to pull it back to that center point, but you see it adjusted that center point because we were way down here. So if I go back, that's why I say I really want you guys to understand how significant these pivot points are. But you also want to be able to see the previous pivot points. Okay, you really want to be able to see the previous ones too, because these are still support and resistance lines in the market. Look, you see right there? Look right here. Look right here. You see right there? They're still on there. So if I come back to the currency that we're talking about right here, you see this is that pivot point. It adjusts, period, but it's also going to adjust on the calculations of that time frame. So you got different highs and lows, and you know it adjusts on each time frame. But it's still going to adjust that, but it's still going to adjust on each time frame. So now, right here, when I come right here, you definitely see where, now I'm trying to combine everything tonight, but I do have a training on the YouTube channel. There's a training on each thing. There's a training on the harmonics. There's a playlist. There's a training on the pivots. There's a playlist. There's a playlist on market structure. There's a playlist on support and resistance. So there's a playlist on every single thing. Tonight we're trying to combine them all. So just so I can't get too deep into each thing, but I just want to let you all know there's a playlist. I'll come back at the end and answer the questions, those very specific questions if I can, because I want to make sure we have enough time to get through this. So now, as you see, it broke the trend line, but you see where this pivot point is. So you see where this pivot point is. And now you see where this one, you see how it rose with these pivot points are rising as the market was moving up. But now you see where this is at. So now we're going sideways. So even still within this harmonic pattern that we just identified, so we identified a harmonic pattern in the market. And with this harmonic pattern being identified, you see that we're still within that resistance. Look where my take profit 3 is. My take profit 3 is on that resistance line. So it's really, really close. Sometimes it's close, sometimes it's on. And you see tonight it's dead on. So that means the market is planning on moving sideways a little bit. So you see you have your 1 hour. Check my 4 hour. Look what's starting to happen on my 4 hour. You see I'm starting to get that curve up. I'm starting to get that confluence on that 4 hour. Now it's a little confluence, but it's still confluence. And then I come down to my 15-minute, and my 15-minute is not ready to take a trade yet, right? It's just not ready. You could have taken a trade on the 15-minute chart, but I mean as far as trading on the hour time frame, because whatever time frame you trade on, if I would have traded on the 15-minute, then my confluence would have been the hour, and I would have had to drop down on the 5-minute. So you see, we definitely had a trade off of the 15-minute. But if I'm trading on the hour, then the hour, I still need my PSAR to flip. right? I have to check my 4 hour, and then of course my 15 is where I would have to drop down to. And you definitely see that it's not quite ready yet for that. So that's that one. So that's actually something to watch. Now, of course, what's happening tomorrow, what could shift the market, what can make things change is, what is this? A major currency pair. So GBP, USD, 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 USD. Tomorrow is NFP. So I'm telling you this, but we've also talked about the news. So tomorrow, once a month, we have NFP. Once a month, we have NFP. So that's very important. And then if I was on the right browser, you would also see that we would get some triggers. So you see how all of this plays together and all these tools kind of confirm. You can definitely use these to really, really confirm everything. So if I was on the right browser, we would probably have some GBP USD as well that would be triggering to let us know what was coming on. So so now let's look right here. I'm gonna go back through and read all of these questions in just a moment. So now, CAD JPY. CAD JPY. Oh, so it is triggering. It is triggering, see? So we got a confirmation that it's triggering. So what's the call price on it and what time frame? And that's my fault because of the browser, because I already know this one, and so 5-minute time frame, and what's the call price? $1.32808. Thank you very much. So let's drop this on there as well. 1.32808. So for those of you all new to the call, the vibrata sends you triggers, right? The vibrata sends you triggers that will pull right here. They're called entry triggers, and they happen at areas of value. They happen at entry triggers. So right here on a 5-minute chart, what you're seeing is an entry trigger. So you see that happen after the correction. So it always is called in a correction. I would check my 30 minutes for my confluence. When I check my 30-minute for my confluence, you see that is definitely coming out of the correction. So I come in here and I type pivots, and you see just the standard pivots. It's no different than if I was to come down here and I was to manually do it like I did on the first training. So I did the standard, like we did the first one down in there. So you see how now it's starting to, once we break and we push through, you see how that, so the 5-minute triggers will alert you. The 5-minute triggers will alert you and push it to where instead of a 5-pip trade, that's that entry trigger for my trade that's being called on a higher time frame. Because you're not going to see movement on a higher time frame first. You always see it triggering and starting from the lower time frame, because that movement, my lower time frames is all my movement, and my movement is happening there. So you definitely see that. So you'll probably see some 777s. So all of this will be on there in just a minute. So it'll be on the YouTube channel, BYOB Challenge on YouTube, BYOB Challenge. There are different types of pivots. Let me go through and answer these questions. Let me finish this one and I'm gonna go through and answer these questions. So there are different, because now what I'm looking at is I have another harmonic scan, and I want to show you, because I wanted to show you on more than one currency pair. So the same thing, I can look at and understand what the market has been doing on a higher time frame. So you definitely see where you are. So you see that we're actually trading in this little area right here. All right, you see that we're trading in this little area right here. And so as I do my drop down, you definitely, this is that same little area that we're trading in, and you can see what's been happening. Now, understand, when I come here, this is one that I want to show you how it's important to understand that break, because now I understand where I'm trading on the big time frame. Now I know how far I can push my trade, how far I should really be going. And so when this harmonic scan is identified, because this is our harmonic scan, you know, this is a harmonic scanner trade, you can see that I can put a trend line here. I put 2 of them on there. I can put one from here, or I can put one from here. It really doesn't matter. Okay, I can do it from here, I can do it from here. So this is why I was telling you guys again, also don't get too caught up with really trying to perfect that trend line, because you see, whether I started it from here or whether I started it from here, you still got to break that trend line. But the BYOB cash out is still there. Like, let's talk about the BYOB cash out. I'm on an hour. Blue line cross over the red and downward momentum. I got a red candle with a flat bottom. I mean a flat top, and I got a PSR flip to the top, right? You see how they keep giving us a smiley face? So right here, okay, right here. So blue line cross over the red and downward momentum, red candle with a flat top, PSR flip to the top. Now it broke the trend line. So what this does is it eliminates all your guessing as well. So I don't have to try to figure out, what is the market going to buy? Is it going to sell? Is it going to break the trend line or is it not? What is it going to do? It eliminates all the guessing. So we know that that's going to sell because I had a red candle with a flat top and a PSR flip to the top. I come check my confluence. Oh, let me check my 4 hour. I have confluence on the 4 hour. Drop down to the 15. When I drop down to the 15, voila, my 15 needs to be selling. And then of course it come retest that trend line and then it starts selling again. And of course this one pulled all the way back up and now it's dropping. And that was a nice drop. Now let's talk about these take profits, because there are 3 take profits in here. So let me jump back up to the hour. Let me help you out with that. All right, let me help you out with these take profits. So this is that first one. Look at that. Ta-da, look at that nice little M. So look at this, okay? You see right here. That's that first one. Then there's another take profit that's in here. Maybe I should use a different color. So there's another one. There's another take profit in here. Change this color, adjust this. 80. Let's see, 80. I already have it marked up, so we didn't have to jump back. 74, and that's too much for a JPY. So right there. Now, let's drop the other one, which you already see the line down there, but I'm gonna do it anyway for the sake of training. 503. Now you definitely see where this line is, okay? Now, what do I don't use their lines, okay? I adjust mine. So you're still trying to learn support and resistance line. This dropped down, it came back up and it's pushing back up here. This dropped down, but let me show you. I would have never kept my take profit down here. Yes, it's kind of right here, but I'm looking for a sale. My take profit is up here. My last take profit is up here. Let me show you why. I'm gonna leave both of those lines on there. One is blue is theirs, and this orange one is my adjustment. Let me change to the line chart. I changed to the line chart. Where am I at with the line chart? Where am I at with the line? Remember, we didn't see any of this. That line chart is a closing price. So whether I adjusted it a little bit right there, but I probably would have put it up here just to make sure I'm within this zone right there. Now, if I was looking for a buy, then I would have did it off of this one. But I'm looking for a sell, so I'm gonna do it off of this one because this is all a zone. Okay, remember they're using the Fibonacci, so that kind of goes back. So let me answer this question now. Using the Fibonacci, so they use the pivots have different types of pivots. One of the pivots you can do is a Fibonacci pivot. So there's a Fibonacci pivot as well. These are the classical pivots that are on here, the standard pivots. So those are different types of pivots, and they're calculated a little different. I explained all of that in one of the trainings when this was introduced, and we broke down all the different types of pivots, okay? And I showed you how to pull it up out of here, how to come grab it out of here, you know, come down here to the bottom, and all the different types of pivots that are down in here. So that's actually in a training. So, thank you so much for the line chart. So, that's awesome for support and resistance. You are so welcome. It is, yes, it's the closing price. So that's definitely something I adjust to, because you see that understand that there is no way to draw a definitive line in the market. It's just not possible. Okay. So even though we're drawing lines on a chart, you have to understand that these are zones. So you don't ever want to get where you say, oh my goodness, why didn't my trade take profit? So, oh my goodness, why didn't it take profit? And when I look right here, now look at where it's at compared to where it was. So I actually would have taken profit. So we actually technically would have hit take profit 3. That's the difference, because this wicked down, it wicked down to that last one. So that wicked down to that last one. So, but it never touched that bottom zone. It never touched the bottom of that zone, but it did wick down. Now, right here, the only reason you would not have taken take profit on that one would have been because of your broker. That's it. It would have been because of your broker. So let me see if I can get some of these questions real quick. Okay, I did the trend line question. Let me see. Do they adjust daily since they're different for each time? Yes, they adjust daily. I think I answered that one. They adjust daily. Yes, they do. And they adjust on each time frame because of how they're calculated. And the pivots, that's, yeah, so to understand the pivots, to understand how they're calculated and what they exactly mean, so go through that training, because that's going to take longer than just a few quick minutes. But the pivot, right, the actual pivot point, the one that's in the middle, is the one that, why is it not pulling up? Do I not have them on here? That would be why. It would be helpful if I put it on here, on this chart. See, standard. So my pivots, you see my pivots right here, right here, right here. The pivot is that center point of the market where it's trying to, where it's identified when the calculations are done, it is that center point of the market. So the lower time frame is your dynamic support and resistance. Absolutely, that is still correct. That doesn't change. So am I understanding correct that the further out the supporter? Yes, that's just the market. It's what you're looking at. The wider they are, it's just more about, you're just looking at, they're gonna adjust based on the market and based on the liquidity and the volatility and everything that's happening within the market. So all of those are conditions that really go into determining where the pivot points are gonna be. So I got the pivot indicator. There's a Fibonacci pivot. There's a Fibonacci pivot. So that's a difference. So if I have to drop that pivot training in there, because what I did tonight is combine everything. If I have to drop that training in the chat, then we will. But actually, let me just drop the YouTube channel. And then you all will have, because you know, Monday is a holiday. Monday is a US holiday. Monday is a US holiday. So you definitely have Monday to go through and train. So Monday is a US holiday, and what I tell you, the market is going to be extremely slow on Monday because it is a US holiday that is going to impact all currency pairs. So no, we will not have a call on Monday. No calls, no school, no trading for me. Now the technicals, how did I pull all of that up? Exactly, tomorrow is NFP and Monday is a holiday. So how did I do it? This watch list right here to the side, right here where this little widget is. So down here, more technicals. So regardless of which time frame you want to be on, you select the time frames you want on here as well. You drop down, and these are where your pivots are, the different types of pivots that you have. And that's why I say go watch that training, because even this one, right? Even this one, you don't have anything but the main one in the first support and the first resistance. So look, I got my oscillators. You kind of see where we're kind of neutral, and then you got your moving averages. And of course, it's going to be on every time. It's going to be on each time frame, and it'll give you an overall indication of what the market's doing. So all of that's right here. So, and you're very welcome. You're very, very welcome. So right here, you definitely can see that. Now, I don't know if anybody took that after that correction, right? I don't know if anybody took that after that correction or started getting that trade, because I told you that 5 minute is great indication to come out of that trade. And now look, we already broke that line. It's already broken that line. And now you can definitely see what's happening. So somebody already got a 777 on a training call. Look at here, look at here, look at here. So, and you already in the blue. So somebody got to trade. It's more than, it's quite a few of you guys got in the trade. All right. All right. So, well, that's it. So what we've done tonight is the tools that we've been combining. So when you come back in the morning, you're welcome. You're welcome. When you come back on Tuesday morning, when you come back on Tuesday morning, not Monday, don't wake up on Monday trying to log in. When you come back on Tuesday morning, okay, enjoy your weekend, enjoy tomorrow. But now you'll understand when we're navigating the market and when we're doing the setups, because you want to, oh, you're very welcome. You want to make sure you understand where this breaks, how it happens, how to take all of the tools, how to do all of this, right? And put it all together, because this is how you're going to, this is definitely going to help. So I definitely have to be, see, I'm using the tool, so I'm definitely am, but you're very welcome. You're very, very welcome. Well, thank you so much. I appreciate it. So with that being said, wait, the holidays, the market slow. Look, we got some more 777s. You're very, very welcome. So now, every time that there's a holiday, that means the market slows down. But this is a US holiday. And so we've been talking about this almost every day this week. This is a US holiday coming up. And because it's a US holiday, the US market is not going to be open. And the US market impacts every currency pair, all right? It impacts every currency pair. So that's it, ladies and gentlemen. That's it. So, all right. So with that being said, it is